And now it's time for yet another adventure of CPA Man. Faster than an internet stock quote, more powerful than a spreadsheet, able to reconcile your bank statement to the penny, able to balance a debit and a credit in a single bound. He's CPA Man. This week, we find CPA Man in his secret underground office in Megalopolis when...
Uh-oh, there goes the financial crisis alarm. I'll bet that my old enemy, False Prophet, is up to no good again. I'd better get to the debit mobile and get down there right away. I'm CPA Man.
CPA stands for Certified Public Accountant. It's the most recognized professional certification for accountants in the United States. To become a CPA, a candidate must take extensive college credits to learn about all aspects of accounting and taxation. And all candidates must pass the Uniform CPA examination. The exam is so rigorous that many candidates will sit for the exam 2 or more times before passing. The accounting profession changes all the time. Once a CPA gets his license, he must take regular, continuing professional education to ensure that he stays on top of all the latest developments in the profession. A major focus of a CPA's training is on Generally Accepted Accounting Principles, or GAAP. GAAP are the rules that all United States companies must follow to record financial transactions. Thanks to GAAP, users of financial statements such as banks and individual investors can easily compare companies and know that their financials are all prepared using the same set of rules. CPAs are expected to uphold and adhere to GAAP. Let's see what's going on in the office now between Mr. Manager and False Prophet.
Make that entry now, I say.
No, I can't. I can't record revenue for sales we haven't made yet.
Blast you! Do it!
But if I do that, our sales data will be overstated. The sales managers won't be able to make good decisions. Our profits will be too high, and investors will buy our stock based on bad information. And if our auditors catch it, we'd be in terrible trouble.
Don't be a fool. If you have more revenue, you'll have a bigger profit at the end of the year, and you'll get a bigger bonus. Don't you want more money?
I do, but...
Then make the entry.
But it's wrong.
Will I have to use my greed ray on you?
No, please, anything but that.
A company that's not doing well financially, or a manager like the one depicted here, may face great pressure to deviate from GAAP in order to manipulate a company's profits and make it look better. CPAs are expected to resist this temptation and always adhere to GAAP, even if it means having to seek employment elsewhere. If a company deviates from GAAP, its auditors may refuse to issue a clean opinion on its financial statements. If this happens, it's very difficult for that company to borrow money or raise capital, and a CPA who fails to follow GAAP risks losing his license. Let's see if CPA Man is able to help protect this company against the evil False Prophet.
Step away from that ledger.
CPA Man! Curses!
Aha! False Prophet! We meet again. I should have known it was you. Thank goodness you're here, CPA Man. He was going to make me record revenue for sales we haven't made yet. False Prophet, you know better than that. You know that is totally against GAAP.
GAAP! Blast you and your generally accepted accounting principles. Business shouldn't have to live by your silly principles.
Those principles exist so that everyone knows they have to play by the rules, so that everyone knows that the numbers are fairly presented. GAAP levels the playing field. GAAP keeps everyone honest.
Honesty schmonesty. This isn't over, CPA Man. You may have won this round, but I'll be back.
Ha! And anywhere False Prophet ever rears his ugly head, I'll be there. I will never stop making sure that all financial statements everywhere are materially correct and fairly presented, because I'm CPA Man.
Tune in next time as CPA Man faces off against evil, out-of-balance man. CPA Man, continuing his quest in defense of good accounting everywhere.